Hey, what's up, my friends? In this week's market analysis, I got 3 big lessons for you. So I don't want to spoil the fun, right? So go and watch this week's market analysis and I hope you find it useful. Okay? See you there. Okay, so I want to walk you through an important lesson, right? An important lesson. So this is the chart of gold. This is the 1 hour time frame. And if you recall, last week I traded the breakout, right, of this resistance. I had a buy stop order over here, stop loss of 2 ATR. So you can see price went in my favor, then it traded against me. And I mentioned that, at this point over here, I was actually trailing my stop loss based on this swing low. If price closed below it, right, I would exit my trade. And that was what happened shortly. Right, I got stopped out of my trade. So basically, I think it was a small loss. After which, right, looking forward, you see price start to rally higher once again. At this point in time, right, traders who cut their trades, they would feel horrible, right? They would feel like a complete idiot, right? Because they cut their trade only to watch price trade higher. So what happens? Well, they have the fear of missing out, right? They cannot stand being on the sidelines while the market is going in their favor, especially in their intended favor, and they cut the trade prior to it. So what would they do? Well, most traders would then look to get back into the market. So they go long over here. And where would their stop loss be? Well, they have no plan for a stop loss because the fear of missing out is clearly greater than following their trading plan. So they simply get long over here thinking, right, this time the breakout is for real. Then what happened? Well, then the market collapsed once again, and they would the market collapsed once again, and chances are they would cut their trade somewhere over here. And then the market, at this point in time is, where it is. So my point being is this, right? Sometimes there are times whereby the market will make you feel like a complete idiot. It makes you feel like, you cut at the wrong place and at the wrong time. And after which the market went in your intended direction. And you want to re-enter the trade, but sometimes your trading plan just didn't give you the setup to enter your trade, and that is completely fine, right? What is not fine is breaking your rules, right? Entering a trade because of the fear of missing out, and then you panic, right? You exited your trade because you have no plan of exit. Then you just exit at the worst possible price. For example, over here, right? Because you go long near the highs, and when it start retracing against you so badly, you panic, right? You lose 30-40% of your account, or maybe you lose your entire account, and you just bail out the trade over here. And then price, starts to, basically get nowhere. But that's beside the point. The point is this. The point is you cannot let the fear of missing out cause you to break your rules, right? You have to admit, right? Even I myself, I admit that my trading plan is not able to capture the trends across all the time frame. I will miss move in the market even though I follow my trading plan. The thing is this, right? You as a trader, you as a trend follower, you are only concerned with following your trading plan and capturing the trends that is relevant to your time frame. And this is it, right? Sometimes the trading plan will cause you to miss move in the market. So be it, right? Just accept it. There will be other opportunities in future. The last thing you want to do is to put on a trade that is clearly outside of your trading plan and then regret it later on. Right? It's going to mess badly with your psychology. It's going to do bad damage to you as a trader, not only financially, but to your mental psychology as well. So you have to bear this in mind, right? Your trading plan is not able to capture all the trends at the market, right? Your job as a trader, as a trend follower, is to only follow your trading plan and capture the trends on the relevant time frame. And you have to bear in mind that there will be times like this where the market will make you feel like a complete idiot even though you follow your trading plan. And that is the right thing to do, right? When you look ahead in the future, when you see this kind of, losses that occur, you actually feel proud of yourself because you actually exited the trade by following your trading plan, right? Moments that you won't feel proud of yourself is moments when you acted on impulse. Like this over here, you go long on the attempted breakout only to watch the price retrace and stop you out. And stop you over here, right? These are moments that you won't be proud of yourself. Trust me. So sometimes it's not the loss that make you feel silly, but it's rather the actions that you take based on your own impulses that is going to make you look like a complete idiot when you look back at it. Okay? So this is the message that I want to point out, right? Gold, right? This is what happened, right? I didn't trade the breakout because I only follow my trading plan. But again, I'm not going to feel sorry or feel stupid because, you know, my trade eventually went in my favor over here and I cut my trade somewhere over here, right? I accept it, right? I accept that there will be times whereby there is just no entry into the trend. Then just so be it, right? Just accept it. Okay? So that is my take on gold. So the next market I want to look at is actually the pound dollar, right? Let's have a look at the pound dollar. So the pound dollar, this is the weekly time frame. And you can see that, you know, it is clearly, right, bearish towards the downside, right? You can see that price broke this key structure support, right? This one over here. Then it traded lower, retest previous, you know, let's do this once again, right? Because I think this is important, right? Some structure lesson that you can learn from, right? This is a key area of support over here, right? It's a zone, it's not a level, right? So price broke through it, right? Then it started to retrace higher. Where did it retrace to? Previous support, now turned resistance, right? Then it started to trade lower once again. So that's it. Your buyers right now, it should be towards the downside, right? I hope you're not trying to long the pound dollar because that is a low probability trade, right? It's a counter trend trade if you want to put it across. Instead, what you want to do is basically to get short on this market. So the next question is, you know, where do you want to get short? And if you look at a daily time frame, I can share with you a few key areas where, you know, you may be interested to get short, right? Since now your bias is number one towards the downside, the second thing is location. Where on the chart do you want to do business, right? For example, you want to buy a property, right? You want to buy it at a prime location. Similarly, when you want to put on a trade, you want to put it at a location which gives you value. And now the question is, which area on this chart is going to give you value? So number three, right? So there are two places which I'm going to share with you. Number one is this key area of this swing high over here. There will be traders who will be looking to trade at this swing high over here. Some will call it resistance, swing high, you know, it doesn't matter, it's the same thing, right? So this is number one, first area you can look for. The second area you can look for is this dynamic support and resistance that you see over here, right? The 20-50 period moving average. This is number two. This is another potential area where you can look to short this market. So number three is where you can either choose to go for the swing high or the dynamic resistance. Okay, so you have three things now going for you, right? You have the trend with you, you have the location, and it's either at the swing high or the dynamic resistance. So the fourth thing, what is the trigger that's going to get you on board this trade, right? So basically you're looking for a specific entry, right? Maybe a candlestick pattern, right? Could be a pin bar, an engulfing pattern, or some traders, they choose not to wait. They just go short the moment price comes into that area. That is fine as well. So that's the fourth thing, right? Entry. And what's the fifth thing? Well, the fifth thing is your stops, right? Where are you going to put your stop loss? Right? You want to put your stop loss at an area where your trading idea is invalidated. So what do I mean by this? So let me run you through, right? So let's get rid of the clutter. So what I mean by, you know, putting your stop loss where your trading idea is invalidated. So let's say, for example, you're looking to short at this resistance over here. So price comes into this area of resistance. Where are you going to put your stop loss? Well, I say put your stop loss at that area where the market will invalidate your trading idea. So at which point on this chart right now would the market tell you that clearly this swing high or resistance is broken? It will be somewhere here, right? If price reaches this area, it's telling you that clearly this area of resistance is broken, it's over. So this is an area where you could potentially put your stop loss. So this is what I mean by it, right? Putting your stop loss at an area where the market would invalidate your trading idea. What you don't want to do, right? What you don't want to do is this. You don't want to, say for example, you go short over here because again, the fear of missing out. And then where do you put your stop loss? You put your stop loss at this swing high. At this swing high. This same area where you expect the market to turn. But again, you acted on impulse, right? You enter because of the fear of missing out. Then what would usually happen? I can tell you what usually happen. The market would get you short, right? You are in the market. Then it retraces higher up towards this swing high. This same location where you initially intended to get short, trigger your stops, and then it trade lower once again. Because why? You have the fear of missing out and you don't follow your trading plan. So again, right? Patience in this business would pay, right? Don't make the mistake of, you know, succumbing to your fears, your emotions, and you neglect all whatever plan that you had in place. Okay, so this is the pound dollar, another valuable lesson that you can take from it. And last but not least, I want to share with you this over here, and there is another valuable lesson that can be learned from. So look at this, okay? All right, this is the dollar against the African rand. So you can see over here on the 4-hour time frame, all right, it looks primed to short this market right now, right? How many of you agree? Rainer, well, this is a market that I'm looking to short. Are you with me? So maybe you're thinking, you are going to short this market. And I want to point out to you right now and tell you that I'm not looking to short this market. Why is that? But first, let's think about why most traders will be enticed to short this market. Well, if you look back, right, clearly, right, lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. This is a downtrend, Rainer. Yeah, I agree. On this time frame, it's a downtrend. And if you notice also, price tends to, do a false breakout of the 50-period moving average, then it trades lower. Another false breakout out of the 50-period moving average, trades lower. And at this point in time, another false breakout out of the 50-period moving average. So there's a good chance it's going to trade lower. Am I right? Well, you could be right, right? At this point in time, in this time frame, chances are, right, that could happen. But wait, before you get excited, there's one thing I want to point out to you. And what is that? The big picture, my friend. Always look at the big picture. You want to see what is the trend on the higher time frame or where you are in the grand scheme of things. So for example, if I go on to the weekly time frame, notice where are you looking to get short? You're looking to get short somewhere around here. Right? And chances are, alright, I'm saying chances are you're going to get short at the end of this pullback on the weekly time frame. There's a good chance that that is what you're going to do right now. So I'm not saying that on a 4-hour time frame you cannot short the markets. Yes, you can short the markets, but you want to be really fast in taking your profits because chances are this is going to be the end of the pullback. And if the trend on the weekly time frame resumes itself, right, you're going to get stopped out of your trade. So on the 4-hour time frame, right, I would say, right, that is a trade that you're not going to hold, in the hopes of capturing a trend because the odds of it happening is very low. Because look at the higher time frame. You always want to look at a higher time frame, look at the big picture and see what the market is doing. Okay? I'm not saying that going short on a 4-hour time frame is wrong. I'm not saying that, even if you go short on a 4-hour time frame, the trend will not play out itself. There could be a possibility of doing so, right? There is the possibility. All I'm saying is that the odds right now favors towards the upside in the long term, right? Look at the weekly time frame, right? You are right now, I would say my guess is near the end of this pullback over here. You're towards the end of the pullback already. So if you're going short right here, you have to be nimble in taking your profits, right? Don't expect a windfall profit because chances are this market is going to reverse and then trade higher from there. Okay? So the lesson is this, right? You want to be aware of what the big picture is. Okay? So that's it, right? This week's market analysis. I know I've packed in a lot of information, a lot of tidbits, knowledge that you can use. So let's do a quick recap so you actually do understand and remember what has been shared, right? I don't want you to exit this video, hear my voice, and carry on with your trading and repeat the same old mistakes again. That is a complete waste of my time in hoping that you'll be a better trader. So please, right? I hope you'll be a better trader, and I hope you would really get a better trading performance, based on my own teachings and my rant or my little discussion we have today. So number one, right? The thing is, follow your trading plan. I missed the word follow. Let's put here, follow your trading plan. So you can actually follow your trading plan, exit your trade at the worst possible time, and the market can eventually go back in your favor, and that is the right thing to do. Because you as a trader, you as a trend follower, your goal as a trend follower is only to capture trends on your relevant time frames. And there will be times where you will miss the boat even though you follow your trading plan. And that is part and parcel of trading. Don't forget that. Number two, when on the pound dollar trade, we talk about the thought process about entering a trade, right? Number one, you want to have the trend with you. That's one. Then you talk about location, where you want to do business from, right? You can do either from the area of support and resistance, dynamic support and resistance. Then you look for your entry, whether you want to look for a confirmation, a candlestick pattern, and then you look for your stop loss, right? Where are you going to put your stop loss? Your stop loss will be at a location where your trading idea is invalidated. Okay? So again, we didn't talk about profit targets over here, but again, depending on what type of trade you want to put. If it's going to be a swing trade, then needless to say, you'll take profit at the nearest swing high or low. If a trend following trade, then you ride the trend using moving average or higher high, higher low, etc. And the third thing you learn today over here is this, right? Look at the big picture. All right, a lot of traders look at their chart on the particular time frame, they enter long and short, and they forgot or don't even look at what the big picture is doing. Then sometimes they get stopped out of their trade and they wonder what they do wrong. Well, what you did wrong is that you did not look at the big picture. So in this example, the African rand, you can see that clearly on the weekly time frame is respecting the 20-50 period moving average, and in fact in recent time it has been respecting the 20 period moving average. So if you want to go short on the lower time frame, chances are you're going against this dynamic support on the weekly time frame, and I would say your short isn't really going to get very far, right? It's unlikely that you'll see your short become this sell down over here. Chances are the market may consolidate a little bit, maybe go even in a bit of in your favor before it rally highers and resume the trend. Okay, so this is the big picture. So with that said, I hope you find this week's market analysis useful. I think there's quite a bit of knowledge and wisdom that you can take away from. Right? I hope it gives you something to think about. Right? Hopefully it resonates with you, and it can actually improve your trading in the days ahead. So with that said, right, I've come to the end of this week's market analysis. If you have any feedback, any questions, don't hesitate to let me know in the comment section below. With that, I wish you good luck and good trading. I'll talk to you soon.